Hello Mavericks, this is Imri and welcome to today's Market Roundup. It is Wednesday, May 29th. So today, as with every day, we'll be doing a review of the trading day. We'll be going through any meaningful news, covering the major events that have happened. We're going to, of course, examine the broader equity markets as well as some key commodities. We're going to examine the market's internals, take a look at a sector heat map, and then wrap things up by looking at a few potential trade setups and opportunities. All right, Mavericks, let's get into it.
Disclaimer: this video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So starting things off with some market analysis. So if we take a look at what's been going on here, it's just a lot of red. All the major averages down on the day, small caps taking the biggest hit, but oil and gold also down on the day. So what did do well? Well, the dollar did do well today. Treasury yields rose fairly sharply, and of course that would coincide with a decline in bonds. And as mentioned, the stock market had a very rough showing as of today. And we can see that in some of the data that's showing up here. The majority of stocks declined today. And we also have a majority of stocks below the 50-period moving average. Okay, so now as we take a look at this chart of the S&P 500, we've had a down day today, but we're still trading within the range of price bar from a few trading days ago. And you can see that prices are still above both moving averages, the 20 and 50 period, so not much of a significant change to our mechanical rating system there, and it's the exact same story here with the Qs. So I do expect prices to potentially decline a little bit further. Maybe we need to tap into those moving averages. So on a short-term basis, there could be some room here to play the downside, but this does remain a bull market, at least for now. Taking a look at a sector heat map, you can see that outside of a few household names like Apple, Nvidia, Amazon, Tesla, Uber, not exactly a household name, but had a good day today. There's apart from those names, there's a lot of red. So industrials, energy, utilities, materials, most of the financial sector all did fairly poorly today. And like I said, unless you are NVDA, you did not have a good day today, broadly speaking, especially for the other semis. Very interesting in that regard. There's a tremendous amount of concentration of buying power in that stock. And let me tell you, that never ends well. So I'm not saying step in and short it. I do think that's very, very, very dangerous. Just saying be cautious if you are interested in playing further upside in Nvidia. There are quite simply better risk reward opportunities out there. All right, moving on. So we can see here we're going to maintain for me, I like looking at a fairly bullish weekly and monthly outlook here, allowing for, we're almost at the end of the month, right? So, I'm looking ahead to June already. It is possible we're going to get a little bit more of a pullback, but I do expect that pullback to be bought. Now, wrapping things up by looking at a few trade setups. First, we have ACLS or Axcelis Technologies, broke out above both moving averages and then consolidated for pretty much the entirety of May. Nice base, not immediately bullish, in line with my view of the overall broader market. Looking for a breakout above that base. Strong daily candle closure would be an excellent trade trigger. And then next up, we have got GM, which is my sideways or neutral pick. Last time I showed this stock to you guys was on May 15th when we were near the top of the range. I was saying you can expect the market to drift off a little bit towards the bottom of the range. So depending on which strategy you use to play this trade, you could have played it directionally towards the downside, but I still think that the higher probability, easier trade is to come up with something that's a bit more delta neutral. And my expectation now is we're going to start gently trying to form a bottom and then start perhaps drifting towards the middle or top of the range again. And then last up, I was a bit early on this bearish pick here in Boeing, but it looks like we have broken down really sharply. You can see that on the big red angry price bar there. And then we've consolidated a little bit, and it looks like the stock could now be on its way lower. All right, Mavericks, that wraps things up for me. So my market outlook is just look for event-driven volatility. Use things like economic reports. For example, tomorrow we have unemployment claims and prelim GDP. Those are potential volatility catalysts, as well as earnings reports, right? So we've got Costco, Dell, Marvel, and Dollar General. All right, folks, that's it. I'll see you guys next time. Happy trading.